Good evening, all. This is Shay Horowitz. Sunday night. Hope you had a great weekend. What a market! Really, really wild. This is a chart of the S&P 500 on a daily basis, and what I want to show you is this bounce off the 666, and you can see how many days in a row we went up, and this bounce and how many days we went up. The interesting part about these two is that the market went straight up for so many days in a row. That does not happen. We actually tied records of the most number of up days in a row in decades, and that's not normal. So why did the market rally? Well, conventional wisdom will tell that the market rallies because earning reports came out not as bad as expected. In other words, companies did not show growth, but they showed that the earnings were not quite as bad. And the earnings came out that the top line was bad, but the bottom line was good. In other words, revenues did not grow, but earnings were better than not as bad as expected because they were able to cut down costs. They were able to cut down expenses so much that they actually were able to come out with better than expected earnings. To me, that's not good news. To me, that's not earnings. That's not growth. I want to see top line growth. I want to see growth in revenue. I want to see new ideas. I want to see new development and so on. Most of what we heard was, we laid off so many people, and that's why we're able to make a little bit of money. To me, that's not good. But the market rallied for 12 days in a row, which is completely insane. Anyway, the bottom line is that for these two, when the market goes down and then it V-bottoms up, to me, that is suspect. And over here, of course, we had some profit taken, and then we resumed. Over here, I think we're going to have also some profit taken, and then I think we're going to resume as well. But I need this profit taken. I need to see this pullback, and then we'll go in, and then we'll buy into it. Yes, we traded on the long side, but not as heavy as I wish we would have, because to me, the rally didn't make much sense. It's kind of like playing musical chairs. When the music stops, are you going to have a seat open? Are you buying exactly the top? We always want to buy on pullbacks inside of a trend because that makes so much more sense. Now, the interesting part about this is the fact that we did break resistance on the S&P 500. That was resistance, and we broke above it. I think we're going to come back down to about this area, and then we're going to come back up, but not much else. Dow Jones Industrial Average, basically the same story. Also, many up days in a row. I'll switch over to candlesticks to show you this, and you can see that basically almost all green. Very interesting. If we look at the NDX, in my opinion, that's what the real story is, because this was more of a technology-driven rally. And you can see how we broke the resistance. We came back. I think we're going to come back down to around the 1512, and I think we are going to form another bottom over here, and then I think we're going to come back up. That's what I'm personally waiting for, and that's when we're going to go heavy on the long side if this rally holds. I think we're going to go into profit taking this week, especially with all the other earnings that are coming out. And, as much as we had surprise over the last couple of weeks, I don't think that the next week is going to surprise, It's kind of built in. Yeah, it's not as bad as people thought it was. So I don't really see what's going to drive the market up even more. Bernanke is going to be speaking this week, which will be pretty interesting as well. Okay, so here are a few things that we have to look at. One of them is gold. Gold is coming up slowly but surely. SLV, silver, is also coming up slowly but surely. Oil is bounced off the 31.49. This is the ETF. It's the oil fund. It follows oil, but not really one-to-one. But you can see how it bounced off this support, and now it's coming back up. Oil is making its way back up. Now, couple that with, here's the dollar, and the dollar, you can see, is breaking support and coming back down. The dollar could go all the way back down to 72 if it keeps breaking down. If you look at the other currencies, all of them are right at resistance. This is, that was the Australian. This is the British. This is the Canadian. This is the Euro. This is the Swiss. This is Japanese yen. Basically, every currency we trade against looks strong and looks like it's about to break resistance and go straight up. If all the currencies go straight up, of course our dollar is going to come back down. What's happening right now is basically the Chinese are getting away from investing in our dollar, investing in our bonds, and they are buying commodities, and that's why commodity prices are coming back up. The more they come back up, the less our dollar is going to be worth, and this is going to put a little of a tamper on this rally. If we look at bonds, this is the 1 to 3, and you can see how if we break that 83.58, we're going to come back down. On the longer term ones, the 7 to 10, you can see that we bounced back up, but looks like we might come back down if we break below that 89.62. Of course, we have to break below that 89.62, and this is the long term, and we took a dive, and now we're coming back down. If we come back down on the bond prices, yields are going to go up. When yields go up, not good for mortgages. Talking about mortgages, I'm going to go into the housing sector. Here is the home builder, the S&P home builders, and you can see that after breaking support, they went straight up based on, again, this push in the market, which could be very, very interesting. The big players for me personally are the financials. XLF. Notice that XLF, which is the financial spider, did not break resistance. The resistance was 1263. If this one breaks resistance, it's a buy. I think that Dow signal pretty good on the financials themselves. I would be surprised if it breaks. I think it's going to more likely to break on the downside, but if it breaks on the upside, should be pretty good. Here's another ETF that should work well if the financials are breaking out, and that's the FAS. This is a triple bull. A triple bull. That means that it will go up 3 times faster than the XLF if the XLF breaks. Now, I wouldn't trade the FAS based on FAS. I would trade FAS based on XLF. If the XLF breaks, that's when I would go into FAS. And there's a ton of upside potential on FAS. It could go all the way up to 100 from 54, which could work out pretty well. The other one that I'm really interested in is SMH. That's a semiconductor holders. The beauty behind this one, you don't have to buy Intel or KLA Instruments or SNDK or any of those. You can buy the whole index, which is the SMH. Now, again, it broke out of resistance, kind of like the NDX did. But what I'm waiting for is I'm waiting for it to pull back. When it pulls back and does this, that's when I would buy the SMH. You can buy the stocks, you can buy the options on it, whatever you want. The technology, in my opinion, would be the leader out of this. The reason why I'm saying technology and financials is because everything else is not quite as clean. This is the technology. I've already shown technology. Let me go back to XHB, which is the home builders. And what I'm showing over here is the fact that, this was a downtrend. And then all of a sudden there was a goof up. And I really am going to call this a goof. The beauty behind XLF is it's still a very well organized trend. And if it breaks out, it'll break out nicely. And SMH, also a very, very well organized trend that broke out to the upside, basically carried this whole rally. And whenever it pulls back and actually shows us another bottom, it will be more of a tradable setup rather than chasing something that's running away. If you're chasing too many rabbits, you're not going to catch any one of them. What we're doing over here is we're waiting for the rabbit. We're setting up a trap, and whenever the trap trips, that's when we're going to go with these. I'm a little worried about the economy still. Worried a lot, really, because the dollar, I think, is going to come down. I think that bond prices are going to come down. I think yields are going to go up, and I think that's going to put a dampener on our real estate market. There is some buying right now, but I think the buying is going to slow down when rates are coming back up. There's some bottom fishing, but that does not necessarily mean a rally. So we're going to have to watch out on that. If you have profits, make sure that you book them. Make sure that you take them, because this week I think we're going to see the profit taken pullback, which could be pretty dangerous if you're holding on the long side. Wait for the pullback, and I think that's going to be much, much more profitable. Anyway, have a great week, and I will talk to you either tomorrow or next week.